On Friday, we saw a nasty red candle out here in the stock market, and I want to warn you guys, stocks always decline double digits after this one thing occurs, which we're going to talk about in today's video, along with Warren Buffett's warning. Now on Friday, we can see basically all day long, all we saw was sell, sell, sell. We look at the heat map, we had a sea of red out there. Now, as we look at the fear and greed index, once again, we are back into fear territory and we're dead smack in the middle. It's been quite some time since the pendulum has been able to swing over into the greed territory. And we look at the most recent investor sentiment survey, which we got this week. We had another horrible reading out there. 29.2% were bullish. 28.4 the prior week was bullish. And if you look at the bears did drop off a little bit this week, coming in at 40.5. Now, with sentiment being the way it is it really any surprise that we've seen stocks starting to cascade lower? And is this the beginning of something that could get a lot worse? Now, as we come over and look at Warren Buffett's warning, and basically this should be heard loud and clear. Pay very close attention. Warren Buffett's warning essentially is he's putting his money where his mouth is. Warren Buffett is sitting on a record pile of cash. Now, if everything was fairly valued in the market and it would make sense for long-term investing, then why is the most famous investor of all time not putting his money to work? It's very simple. The market simply at this point is extremely overvalued at this current time. Now, as we come over and look at the SPY versus HYG, we can see the SPY out here on Friday, a nasty, nasty candle. However, HYG also was not near the peak that we saw earlier this year. That by itself is a warning sign that we must also pay attention to. Then as we come over and look at the 10-year versus the 2-year, you can see well above the area where we are uninverted. What we need to pay very close attention to in the near future is, do we start to see a steepening of this yield curve? If we do, that most certainly is going to be problematic out here for the stock market. Then as we come over and look at the Dow Jones versus the transportation index, and we've kind of been talking about this here for a little bit now, and we can see on the weekly chart, notice the Dow could essentially have put in a double top. And on this second peak on the Dow, as we come down here and look at the transportation index, notice it's much lower than where it was when the Dow was at all-time highs. Again, another warning sign out here for the stock market. Now, let's talk about one of the most concerning stats out here for the stock market, and that is essentially when the first 3 weeks of February have been negative. Let's look at some of the returns that we've had afterwards, starting off on the first time this occurred. And this stat is going all the way back to 1950. 1969 was the first time this occurred. Over that 3-week period, the market was down 3.13%. Then over the next year, the market was down 11.78%. The next time it occurred was 1973, where that 3-week period was down 1.15. Then between 1973 and 1974, we were down 17.42%. The next time that occurred, 1974, we were down from 74 to 75, down 12%. When it happened in 1977, you can see we were down 12.84%. When it happened in 81, we were down 10.55%. However, here's where it starts to get a little bit troublesome. In 2001, that same period was down 8% the first 3 weeks of February. 2001 to 2002, you can see we were down 13.89%. Then in 02, we were also down that same period, 4.36%. In 02 to 03, down 21%. Now, as you look in 2008, we know the great financial crisis was horrible. We saw the market was down 42.64%. So now the question is, how much are we going to be down this time? Let me know if you think this is going to end up producing a double-digit negative loss for the stock market over the next 12 months. And let me know in the comment section down below, how low do you think that stock market is actually going to go over the next 12 months? Now, if we do continue to see weakness in the stock market, is that going to translate over into the Fed? We know we have 24 days left until the next FOMC meeting. And we can see right here that the market's pricing in a 94% chance the Fed will do nothing at the next meeting. However, as we come over and look at the probability chart, we can then start to look right over here and we can see it's already started to shift. You know, just a few weeks back, they weren't pricing the first rate cut until September or even October. Now, with the price action that we've gotten on Friday and some of the horrible economic news that we've been receiving lately, we can see now the market's pricing in the next rate cut as soon as June. So if the Fed is going to be cutting rates, is that also a clear sign that something is already broken in the economy and the stock market is about to feel the wrath of what that is? Now, I want to remind everybody, Apex right now is having an 80% sale off all their valuation accounts, passing as little as 1 day. Use the link in the description box down below and use promo code Mike. And if you're tired of all the BS, all the drama out there, and you want a prop firm where you can get daily payouts, you want to go ahead and check out Take Profit Trader. Right now, they're having a 50% sale off all their valuation accounts. Use code Epitome at checkout. And to check out any other prop firms that I currently am using, use the links in the description box down below. As we look at a chart of the SPY real quick, and again, that nasty candle we had on Friday, I was actually hoping Friday we're going to push up, take out that next ABC target up here about 616. However, if we start breaking below 598.43, that's going to invalidate that ABC pattern that we had up, which will make it a busted pattern. The volume out here on Friday was greater than anything we've seen so far this year. Now, if we look out here on the weekly chart, we can also see the MACD indicator is crossed to the downside. It has been bearish for quite some time, even though the SPY has been able to run up, making new all-time highs. The 4-hour chart, you can see we do have a little bit of cross on that MACD indicator to the downside. And as we come over and start looking at the 30-minute chart, that last 30-minute candle had a lot of volume out here. And I kept warning traders, we talk about this quite a bit in a lot of the analysis videos. Anytime on a Friday, more specific than any other day, when we have a trend started in the morning, if that trend's still intact after lunch, quite often they're going to continue to push in that direction. However, now the question is, has the market gone a little bit too far, too fast? MACD indicator is on the early signs of just starting to flatten out down here at these lower levels. And if we drop down to a 5-minute chart, we can see we've already had that MACD indicator cross, and this is going to be troublesome. All right. This is a problem that we talk about a lot of times with the MACD indicator. People see a bullish cross. If it gets up towards that zero line and we're still consolidating down here at these lower levels, watch out. That could be nothing more than a recharge point for another leg lower. However, look how thin this market structure is on the way down. The profile, very, very thin. It'll be very easy to undo it. Now, if we do get a major rally earlier on this week, one of the areas I do want to target is going to be up here about 605.77. Now, as we come over and start looking at the futures markets real quick, notice that was absolutely horrible. We got a complete volume profile rotation through the entire value of last week's volume profile. And I kept warning you guys, high probability we're going to hit at minimum 6112.50. And if we got lucky, we hit 6,088. I'm really surprised we did a full rotation all the way down. However, if you look at this week, we have another instance where we're closing outside of value. Value area low on the weekly comes in at 6107.25. The point of control is going to be 6133.75, with value area high being up here about 6158.75. Now, anytime we close outside of value, I expect within the next 1 to 2 sessions, we're going to go back and retest that area. So the prior week, we closed outside of value area high. So one session, and since we're dealing with a weekly profile, would be 1 week in time. So within the next 1 to 2 weeks, expect a bounce maybe up here towards 6107.25. However, will we see a gap down come Sunday night? And will Monday be extremely ugly in this market? As we dive down and start looking at the 30-minute profiles, notice we built a little bit of volume down here near the lows of the day. Now, something I'd like to see, fingers crossed, we'll see if it happens or not. But on Sunday night, can we get a gap lower that we can potentially buy back up? Some of the areas I want to target back on the upside, I want to focus on this minus development area if indeed we do get that gap lower and we start to bounce back up. 6,041.5 would be that minus development area. Now, a gap lower, ideally, I'd like to see this gap below value area low, which will come in about 6,024.5. The point of control is right above that, about 6,031. Value area high is a mile up higher, about 6,098.00. Now, if we were to pull a simple Fibonacci retracement on the 30-minute chart of that entire leg down that we saw on Friday, notice the 38% retracements up here about 6,069. However, I want to warn you, on Sunday, if we do indeed gap lower, then what we'll have to do is we'll have to go ahead and drag that Fibonacci retracement level a little bit lower to get a more accurate reading of where that 38% retracement level will come into play. Now, as we come over and look at the economic calendar for next week, what do we have on deck? Well, on Monday, no major economic news to report on. Then on Tuesday, we get the S&P CS Composite 20 HPI year over year. We also get consumer confidence at 10 a.m. We have a slew of FOMC members speaking throughout the week. Then on Wednesday, we get some more housing data, new home sales coming out. On Thursday, we have preliminary GDP numbers coming out, the weekly unemployment claims, durable good orders coming out all at 8:30 a.m. So more FOMC members speaking, pending home sales coming out at 10 a.m. Then on Wednesday, we're going to get the Fed's preferred measure of inflation. PCE data comes out at 8:30 a.m. Then at 9:45, we get Chicago PMI. So later on the week, we do have a little bit more economic news to contend with. However, next week is going to be big. We have some earnings coming out, and we want to pay attention, especially on Wednesday. We have NVIDIA and we have Snowflake coming out. Now, we know NVIDIA is quite a large weighting of the indices out there. And if we look at the big expected movers out here for next week, Lucid expected to move plus or minus 17%. AI expected to move plus or minus 16%. Snow expected to move plus or minus 12 to 13%. Then we have NVIDIA down here plus or minus 8%. Now, if we look at a chart of NVIDIA, we can see right now it is above the anchored VWAP right over here. However, that candle on Friday does not look that healthy, but I do suspect that we'll probably see NVIDIA kind of bouncing around these levels until that earnings come out here on Wednesday. Then we'll see, does NVIDIA get quite the move out here after that? Now, if we come over and look at the dollar index continues to show signs of weakness. MACD indicator still crossed to the downside. And we also saw bonds. On the way lower as well. And normally when we see bonds going lower, that favors the bulls. However, when there's a lot of fear in the market, then people essentially go into bonds, flee into safety, and that will push yields down here just a bit. Speaking of volatility spiking up, we see the VIX up 16.42% on Friday, which indicates highly probable that either Monday or Tuesday is going to be an update in the market. Now, it doesn't mean it's going to be a huge update in the market, but it does indicate highly probable it will be an update. And I kept warning you guys, as the VIX gets down towards lower levels, we can see these volatility spikes like we saw on Friday seem like they come out of nowhere. Now, as we come over and look at gold still nearing all-time highs. And as the dollar is coming lower, we would expect gold to continue to go higher. However, I do want to caution you guys, MACD indicator is a little bit elevated at this time. We do have that gap down here just a bit lower. Now, if we were to pull a fib all the way down here from this swing low up here towards the swing high, notice right now the 38% retracement comes in about 2,831 and a half. However, if this week we make a new all-time high, we'll have to go ahead and grab that Fibonacci retracement level and move it up here just a little bit higher. Now, as we come over and look at the QQQs real quick, notice a big nasty red candle on Friday, and we have now came all the way down towards that 78.6 Fibonacci retracement level. If that level gives way, highly probable we're going to go all the way down towards this lower swing point at about 521, at about 521.91. Now, on Friday, I was hoping we're going to go ahead and firm up, come up here and try to start taking out some of these upper level ABC patterns to the upside. However, if we do break that 521.91, that's going to invalidate that first ABC pattern at about 543.20. So again, we need to be on the lookout. Do we come down and violate that level? MACD indicator on the daily chart is just about to cross lower. And that candle that we saw on Friday was very, very negative. As we look at the weekly candle, also closing near the lower end of the range. However, if you look, we're basically still up at the upper top of this upper level consolidation. So not a lot of damage has been done just yet. However, it could get worse. On the 4-hour chart, MACD indicator just crossed to the downside, and we're trying to make our way down towards that zero line. And we do have a high volume node down here on the profile, about 522.37. As we dive down, start looking at the 30-minute chart real quick, notice we had quite the move down on Friday. And if we do not gap lower on Monday and this low holds on Friday, we want to start looking, where's the 38% retracement level at? All the way up here about 530.50. And if we get a real good retracement on the way back up, I'd like to see the market come towards that 50 to 61.8 Fibonacci level, which would also be a structure breakdown point, which I would measure from candle body down here to the candle wick and just simply project all the way over here to the right. And again, that falls right between the 50 and 61.8 Fibonacci level. That could be nothing more than the market basically working off some of that momentum to the downside, getting ready for another leg lower. Now, as we come over and start looking at the futures markets real quick, notice on the 4-hour chart, we smashed through that untested value area high. We smashed through that naked POC, and we made it all the way down here, very close towards that value area low. And we made it all the way down just below that value area low at 21,654. Now, as we look at the shape of the weekly volume profile, it would be a P as in Paul. And what that says is if we're below value area low, highly probable we come down to the lower third of the range. Well, the problem with that this week is we are already down at the lower end of the range. Now, if you look at value area high, that's going to come up here about 22,053.75. The point of control, which will be an untested point of control this week, will be 22,184.75, with value area high being up here about 22,281.25. Now, if you look, we do have another high volume node just below us down here. So if we get a negative, real nasty reaction on Sunday night, this could be one of the areas we look to target early next week, about 21,491. Now, keep in mind, since we closed outside of value, highly probable that this week or next week, we're going to come back and revisit that level. But I do want to caution you guys, whenever we close really far away from value, quite often it ends up being more than 1 to 2 weeks before we come back and visit that level. I also want to make you guys aware of this structure breakdown point anywhere on the 4-hour chart from the candle wick to the candle body, and that's going to be somewhere in the ballpark of about 951 all the way up here to about 22,010. Now, as we come over and start looking at the daily profiles, notice close at the lower end of the range. We did build out a little bit of volume down here. Now, one thing I'd like to see is notice after hours, we did go down and we made a new session low. I would love to see the market go ahead and spike down out here on Sunday night. Then we have the question of, do we want to play that gap on the way back up? For me, it makes sense. For you, it may not. Now, if you want to be a little bit more cautious on that, wait and see. Can we come back above value area low, which comes in at 21,662.5? Then we can target that point of control at 21,689.00, and value area high is way up here at 22,014.5. But notice, right, this highlighted area on the chart is that same structure breakdown point that we just talked about on that 4-hour chart. So again, we have value area high falling within that level, and we have a structure breakdown point on a higher time frame chart. Now, if we pull our Fibonacci retracement of that leg lower that we saw on Friday, notice the 50% level comes in right near that shaded area, the bottom of that structure breakdown point. However, if we do gap down on Sunday night, then we're going to go ahead and have to move that Fibonacci retracement level on the way back down. But assuming this level holds right here, that 50% level would come in at the bottom of that structure breakdown point. Now, if you guys would like to learn why I think Take Profit Trader is the best spot firm out there, then you want to make sure to check out this next video right here.